All right, guys, so now that we've gone over top-down analysis, how to break down charts and long-term investments based off of the higher time frames, as in the 3-month, the monthly, and the daily, now we are going to do day trading, and this is how we are going to break this down and get literally inside of these monthly candles, because that's what we're going to be trading. We're going to be trading inside of monthly, weekly, and daily candles, and that's how we're going to find our entries on the 1 hour, the 15-minute, and the 5-minute. So, as you can see here, I have a monthly chart open, and as you can see here, I have a 4-hour chart open. Your 4-hour is going to have your most powerful, effective price action, meaning that support and resistance is going to respect itself very well, but price action, the power of price action, is very, very effective. Now, when you go through and you're back testing, you'll be able to see, when you see your engulfs, your morning stars, your swing high shooting stars, your hammers, how effective they play when it comes to the 4-hour. So we want to use the 4-hour as our map. It's really a very good masterpiece, your inside map. And then the monthly, weekly, and daily are going to be your outside map. That's going to be what way is the trend kind of heading? Have we thrown wicks? Where have the wicks been thrown? Where do they need to be filled? Have we hit support? Have we hit resistance? So when you're looking at these monthly and weekly and daily time frames, you're going to be looking very close to see what price is really doing. So different rules are going to apply when we are applying support and resistance. Now, again, we are going to attach our attachment piece and our magnet. But what we're going to do instead here, and this is up-to-date data, I want to explain that to you guys because we're going to do live trading, live back testing, where we take actual live back tests where I don't even know where price is going to go. Right now, we are currently up to date. This is the month of February 2022, so we are currently up to date right now with where we are with price. So I'm going to break this chart all the way down for you and tell you where I think price is going to go. And then in a future video, we're going to go over with everything broken down, support and resistance, trend lines, wedges, consolidation boxes, everything included. We're going to show Fibonacci's. We're going to show you guys how we're entering trades, and we're going to show you our back testing results on wins and losses, etc. So let me show you guys how we would break these charts down, and then we'll get to it. So starting on the monthly, what we're going to want to do is we're going to want to go to the full screen of the monthly just so we have a better view. Remember, this is the attachment piece, so it is going to go to our other charts. So let's cap off the monthly low. Here we can cap off, because we have that little wick, we can cap off the monthly high. And because this is such a bullish sequence as it looks right now, we're going to cap off the previous monthly high as well. So now that we have a better scope on that, what current candles are doing, because we're not necessarily, we're worried about the trend in this aspect on the monthly time frame, but we're more worried about what this candle is currently doing and what the previous candle is currently doing, because we're looking for support and resistance levels, and we're looking at the wicks. Where did price go? Where did price come back up to? Does it need to come and fill these wicks again? Has it even created a wick? So that's what we need to look at. Now, going still on the monthly chart, we're going to go into our weekly chart. We'll go to the full zoom. Now what we're going to do is we're going to cap off this week's low. And we're going to cap off this week's high. And I believe the day is Sunday, so this is just opened. Now what I can see here is remember, to qualify a trend line we need 2 taps. So I am going to apply a trend line right here with tap 1 and tap 2 just to give us a radius. Remember, 3 is execution, so we will be looking for a 3rd tap inside of this zone right here. Now let's check out what our daily looks like. and we're going to sit on our daily. So now looking at the daily, we have our support mapped off, our floor. We have our trend line applied, and we have clearly wick resistance. We have our current monthly high, which is right here. Let me move this to the top so you can see it better. We have this week's high. We have this week's low. So we know we're kind of range bound in between this level right here. Are we going to break through and come for our third tap? Or are we going to, which we already threw a wick down here, are we going to come back down all the way down into the monthly low of support? Right now, this looks like a bullish sequence to me, although we are coming into a double top, which would give me, in an intraday aspect, short-term long bias, but a longer-term short bias. Because here we have our A, our B, our C, we have one tap. We'd be looking for a double top for two taps to come and make our D. So now that we have identified our monthly, our weekly, and our daily all on the same chart, we're going to scroll out. We're going to go to our 4-hour chart. Now looking at the 4-hour chart, what do we have here? Let's take our attachments off so it doesn't apply to our other charts. We have our A. Take the magnet off as well. We have our B. Now what we are going to do is apply a fib. From top to bottom, it's a bearish format. Remember, we're downtrending. This is our significant high. We made our significant low. This is our pullback. If you wanted to look at it like this, we'd have A here. We'd have B here. We'd have C here. We have not made our D yet. So we have A, B. So now we're going to apply Fibonacci. So now looking at this chart in a bearish format, we have just retraced the 78.6 with one tap, although we have not received any entry candles that are telling us to get into the market. We rejected off of here, made a nice, look at this candle we have right here. Our wick got basically filled, and then we had no wick at the end of this bearish candle. Immediately shot back up here to the 78.6, which we are now throwing wicks at, but this is current price action. So now that we have a scope, what our 4-hour looks like, we have our monthly, daily, and weekly all lined up. We know that there's a bunch of levels of possible resistance here. We know that we are anticipating our third tap, but our overall bias is going to be bearish, which that would be, on this 4-hour chart, our bias would be to take profits somewhere around here, which lines up accordingly with these lows. So now going to the 1-hour chart here, and this is the invert black flip chart, and this is not GJ, this is UJ. They're all on the same pair, just so you know. What do we have here? Price coming down. We have A, no attachment, remember, so nothing's moving over. We have B. Now what we're going to do is we're going to apply a Fibonacci. So remember, guys, this is the flip chart. Now also, let's make this so everybody can see it in a different outlook. Let's go back to our color theme. We'll go back to the basic gray. We'll flip the chart to an invert. Remember, guys, our short-term bias was bullish all the way into this trend line, and our long-term bias is bearish, which is going to line up perfectly with our monthly support. So what I would be anticipating here And look what we have right here. We have A. This is the 1 hour. We have B. We have C. We have our swing low hammer as well. This qualifies an entry. Now we would be anticipating price, and it hit the 50 level. But remember, we're anticipating a trend line touch. But we do have this week's high, which I'm not too considered about because it's Sunday. The market just opened up. And then we have last week's high and the monthly high right here. So these would be levels of interest to me, which line up perfectly with our minus 2.7 extension. Now remember, the 50 likes to go to the 0.0 level, but it's always going to be different. It's with each pair. So what we would now want to do, now that we understand what our directional bias is, now we know, okay, we are bullish short term, we are bearish long term. If we want to take a bullish trade, we want to take a bullish trade to that trend line at most. It's a riskier trade, or we could sit on our hands, wait for that trend line to be fulfilled, get one of our power play candlesticks, and take a short position all the way down for a much better risk to reward. But say we were to go long here, what we would do from this point is, now that we're on the 1 hour, we're going to go to the 15-minute time frame. And we are going to look for our ABC one more time. So here we have A. Here it looks like we're making a nice B. If this candle actually rejects and pulls back for us, we can apply a fib from A to B. And we will be looking for entries somewhere around the 61.8 to the 78.6, because remember, our trend line is here at the minus 2.7, which lines up accordingly perfectly from our 4 hour and 1 hour Fibonacci. So now we're fibs inside of fibs. So we're hoping to get a pullback to one of our golden ratio, or even lower, so price with more variables goes higher. So we would to get precision entries on a day trade, we would be anticipating entries to be somewhere around here, and we can set orders. We could set stop losses below our significant low point. So this would be a 10 pip stop. And we'd be looking to take profits right here at our trend line and our monthly high. This is where we would get cautious. And this would be a 1 to 2.8 risk to reward. So say you were to risk $1,000 if you got stopped out at the low, or you would make at the top of this $2,800, $28,400 is how much you would make if it went up to our take profit level, obviously. And then from there, we know that we have fulfilled. We would wait for price to give us another signal to enter, and we can swing it all the way down to the weekly low, where our significant low was. And we can consider leaving profits on the table and bringing it back down to our 1 hour low. And again, you can continue holding profits. It's extremely hard to do so when the money's on the table, and you could hold it all the way down to here. But yeah, guys, that's about as straightforward as it needs to be. That is how we day trade. Very simple. Obviously, you're going to have to run through this the whole time. But again, I emphasize so much on the Fibonacci and the ABCD because it is everything. A, B, C. We're on our way to make D here. Hopefully, it fulfills our extension. And then after that, we can look at the higher time frames, as in the daily. A, B, C. Come up, fulfill C on that trend line, and then come all the way down and make our D. Wherever we can apply a fib for it. We'll find our D. And that's how you get massive booming trades. And again, we use the ATR as our stop loss, but as our take profit, we're traders. We have to be investors. We have to be smart. We have to know how to handle our money. So we can realistically take this thing all the way down here, which obviously that's a 1 to 31. You'd make 31 grand on a $1,000 risk trade. It happens. It's happened plenty of times. Personally, not to me. I haven't hit a 1 to 30 unless I was trading penny stocks or cryptos. But in the Forex market, you're more so looking to get your bag and get out. You're looking for risk to rewards around a 1 to 10. Once you hit a 1 to 10, you should be pretty satisfied. I mean, you should make a lot of money, unless of course you're swing trading. So it's always going to depend. Again, guys, this is a day trading video, but yeah, guys, that should be the end result, and that's how your chart should look. Let's see, let's clean that up. We'll delete that. We have our 78.6. We want to come back for one more tap into the 78.6, which will line up here. Let's copy over our mini fib. Copy. We'll paste it over. And the 618 lines up perfectly with our monthly high. 27 is mid-range, right above this week's high. And now we are coming down to make our retracement for our A, B. Now we're coming for C. We execute off of C, take it to D. And yeah, guys, that's our introduction video to how to day trade from higher time frames to smaller time frames. Thanks, guys. I did too.